Welcome to the Best of U.S. Investors, two regular guys show. I am Trent, and that's Mark over there somewhere. Yeah. Anyways, and today we're going to get into the markets, what's going on with them, some economic news, some other big investor decisions, and why they may have made those decisions. And based off last week being a short week and a low volume week, we're entering the last stretch of the year, and this is when things can go really great or really wrong. So let's get into it. Hey, Mark,
Well, how's it going? How
it's
was your
all right.
bank made it through the first part of the holiday season, I hear?
Yes,
So
yes, we yeah made it through. Here we
good.
are.
It's interesting because now we're into the stretch of the last month of the last quarter of the year, in 2024. And it's going to be a short stretch because the distance between uh, Thanksgiving and Christmas is shorter this year. Okay, there'll be less shopping days left. So if you need to go out and shop and get your credit card run up to the max again. And you still have a little time to do it, just not as many days. Uh,
Yeah.
but a lot of times, in December, they call it the Santa Claus rally, and everyone's happier, and everything's happy, and the portfolio managers are trying to rebalance their portfolios. So at the end of the year, when they send out end of the year statements, they call it window dressing, that you have all the hot stocks and everything in your portfolio. So it makes it look like, well, I only made 7% this year, even though the S&P did 22. But look, I got all the stocks in there. So there's some of that fun stuff. You're going to get your year-end distributions from some of your mutual funds if you have it, or ETFs and things like that. And of course, you got your tax lots, and what am I going to sell? When I'm going to sell some losers, tax lot harvesting. Yeah, there's a lot of stuff going on in the next 3 weeks. But I think what really is interesting, and maybe you've seen it, just talking to people, is the optimism that I see in the country, and I think it relates to change in the administration that's going to come up in January 20th. You're already seeing all kinds of activity going on. President Trump elect is, he's really going to shake it up. If you look at who he has, and he's nominated for his cabinet and for other positions. It's going to be an interesting ride. It's not going to be business as usual, it looks like, and so that's going to make for an interesting next 4 years for sure. But we're just kind of worried about getting through the end of this year. But I do understand, optimism you can see out there. I've seen, entrepreneurs on CNBC and Fox Business talk about, it's a little bit brighter now because we're going to have an administration that maybe will lower taxes and support more local uh, companies and things like that. So we're starting to see that. And real clear market economic optimism index came out today. It increased by 0.8 of a point to 54 in December of 2024. And that's the highest since August of 2021, and just below
Wow.
market forecast of 54.1. So the index continues its upward trend in December, and that's building on the rebound seen in November after the election following Donald Trump's historic return as the 47th president. So optimism, even though the economy is not caught up to that, in my opinion, we're seeing the optimism go, and that's it's good to be more optimistic, even if you're kind of negative on other things. The S&P Global Manufacturing PMI came out this week. It was revised higher to 49.7 in November. It's still in the contraction mode, but just by a little,
Right.
from a preliminary 48.8 compared to 48.5 in October. That's pointing to near stabilization of the manufacturing sector. I mean, if we get to 50, it's neither growing nor shrinking, which we haven't seen in a while. Optimism about the year ahead has improved to a level not seen in 2.5 years, buoyed by the lifting of uncertainty seen in the lead up to the election, as well as the prospect of stronger economic growth and greater protectionism against foreign competition under the new Trump administration in 2025, said Chris Williamson, chief bureau economist at S&P Global Market Intelligence. So we're starting to see that creep into the markets and these reports. We're going to have to see how that actually manifests itself in all our economic reports that we're going to have coming up. So have you seen optimism? Are you optimistic?
I'm a lot more optimistic than if Harris had gotten in, right? One thing I saw was interesting. So Ginger, my wife's an artist. She did a show Saturday night down the road from us, and I think a lot of people know I went to Texas for a month, and we did a show, 2 week show there. The comparison in optimism between Texas and Saturday night, totally 180-degree change. People spent money. She made a did really well in comparison to the Texas show. And it was resembled by this positive let me buy stuff attitude, whereas prior to the election, people just didn't know. They were nervous, they were hesitant to spend money, and they didn't. And we have seen that through her business since probably May. And once we got past the election, we're now starting to see people loosening up their wallets. They're spending money. There's a lot more optimism, less talk about hate and all that crap. So I'm encouraged by it. But the reality is we still have what we have. We still have this platter of economic data that is not favorable. We have a massively expanding national debt that's costing more than our what budget for the military is. Um, that has to quickly come under control, or this optimism could quickly dwindle very fast.
Yeah.
And I
So
think like you and I have talked about, I think it should be anticipated once the new administration's in, you got to give them 6 to 9 months to 12 months to start seeing major differences overall, because
yeah,
there's a lot of red tape to go through.
it's going to be interesting. There'll be, a lot of roadblocks to get through.
Yeah.
Things just don't change that easy in government. It's like turning a tanker. So we'll see what happens. I'm more optimistic about it, and we'll see. We've experienced life under this administration before. 4 years ago. So it's not
Hmm.
like we don't know what to expect. And basically, he's doing the same thing all over again. So we'll see. One thing that is for sure is the stock market's at all-time high. Um, but however, when you look at the S&P, it's trading at extreme valuations. Historically, the PE of the benchmark index typically trades around 19 or 20. Today, it's just at 30. Okay, and most of the gains are coming from just a handful of stocks, and those stocks are Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, and they account for 1/3 of the index valuation, but are responsible for half of all the index gains this year. So if one of those, the concentration of the returns in these relatively few stocks indicates that anything that upsets their upward trajectory could cause the S&P 500, to do a little bit of a downturn or even a crash. So we're relying a
Yeah.
lot still on these main seven stocks, and historically that's not a good thing. If you go back before the Great Depression, you'll probably see that the same thing has happened. So,
Yeah.
um,
I
go ahead.
I think the market has, I mean, the valuations on a lot of these companies just overall has skyrocketed. I think we're going to get into an indicator that you and I both watch, and it explains a lot of one other investor's behavior recently.
Yeah,
Um, but I do think we are seeing where these company Mag 7 stocks have gotten, they bounce, they go up a little bit, maybe they make a little bit more high, but they come back down. There's a lot of resistance we're seeing
yeah,
in that big
definitely. And you see
seven.
it on the charts. You see it on the charts every day, and it's just sideways, maybe a little up, sideways up. Let's
Yeah.
talk about that because we can get a lot, from big investors and where are they going. And one of my favorites, and I own Berkshire stock, is Berkshire Hathaway with Warren Buffett. Okay, so it's interesting now because if you look at what Warren Buffett's been doing, and it's no secret, it's out there, his largest holding you think was Apple, but it's not Apple anymore. It's cash. In fact, he sold off significant sums of Apple stock this year to build up his cash hoard, mostly held in U.S. Treasury bills. And Michael Saylor will say, he's losing 3 billion a month on those treasury bills just because of the deteriorating dollar and inflation. His massive cash position, such he is, says he might be sending out a warning signal to investors that should heed it. It suggests that Buffett holding so much cash is not making a large acquisition, means that he's looking to create a big buffer in the event of a downturn. Buffett told shareholders in any given year his large cash position is a sign of extreme financial conservatism, aka akin to a insurance policy on a fortress like a building thought to be fireproof. But this massive buildup indicates Buffett thinks he may just have to file a claim, meaning that what he wants to do is he's waiting for a calamity so he can buy up assets on pennies of the dollar. He thinks things are overvalued. He's looking at the same stock as we are. And you want to talk a little bit about his indicator, so go ahead.
Yeah. So let me pull up a chart of the Buffett indicator. And so this is from the current market valuation .com. And this goes back to September or ends on September 30th, 2024. And what it's basically showing you is right now, based on the Buffett indicator, which is the total market value divided by the annual US GDP. And so what you have is a 208% ratio between total market value, US market value, and GDP, which if you go, which is two standard deviations from this historical line that you see here in gray. So if you go back to the 1970s, where we got to that point, we then saw the S&P or the indicator drop, and we saw markets get strained as well. Go back to 2000, the dot-com bubble, similar situation. Go back to um, housing, not so much, just a little off the historical line. That was back in '07 to 2010 or so. And then the pandemic, we were up once again where we are today. And then today, where we are, we're 60, as of September 30th, we're 67% above this trend line. So he has unloaded a ton of Apple, a ton of Bank of America. He's got over $320 billion in cash. And he's following this trend, this indicator that he uses. This gives you an idea of where he has seen bubbles in the past and opportunities as well. So the internet bubble that's represented here was 2.1 standard deviations above trend. We're now at 2.2 standard deviations above trend. So similar to the internet bubble, but this is where he got back in and started lending money and borrowing money, or lending money and investing was back at the bottom of, was it probably '09 or so, and it was 1.5 standard deviations below the historical trend. So if you're following Buffett and you think he is a super investor, this is what he's looking at. He sees more overvalued markets, which if you look at individual charts, you can see they're trading in a range. Nvidia trading in a range, S&P sort of trading in a range. Tesla, all these companies, this big Mag 7 are trading in this range. And what I see Buffett doing, old school investor, buy companies he understands that make money, he's raising cash so that he can go buy all these companies that are at a high end at a lower price in the future. When does that happen? Only the
He's
market gods know, but I think he's probably more spot on than most.
Yeah, I think he's
So
using statistics. Okay, and as an ex-quality engineer, I use statistics all the time, and normal distributions and z-scores to figure out, where a certain part or a defect would lie, or if you look at what you just showed to me, that as a swing trader is a Bollinger Band. A Bollinger Band is two deviations on the upside or the downside of any medium, which is usually the 20, And so
Yeah.
when a lot of people, when it hits the lower Bollinger Band, they know it's time to move up, buy in. When it hits the higher Bollinger Band, they know to get out and get out. And so it's Warren Buffett's Bollinger Band, basically, from what I see,
Right.
and it works. Okay, but it's numbers. Again, we're going back to numbers and standard deviations, and it's something that I rely on a lot. Is in swing trading, is numbers, moving averages, Bollinger Bands, oscillators. And that's helps us become better aware of if you're a trader when to get in and out, if you're an investor when you might want to get in or out,
Yeah.
depending.
And
So
and I would label Buffett as an investor, right? You don't buy
but
Coke and hold it for 50 years or whatever period of time he's held at Coke if you're a trader. He believes in the company, he believes the growth story, he believes in its balance sheet. He's an investor. You look at what his actions have been during the dot-com bust, the housing bust, the pandemic, and now this guy isn't like willy-nilly. He doesn't want to
no,
sit in cash. He knows he's losing money, sitting in treasuries right now, but he knows he's going to get a greater opportunity to make up the difference.
because yeah,
So,
because he knows I would rather keep that profit that I have on my Apple, that I
yeah,
have in my Bank of America. I'm going to keep Coke and I'm going to keep Heinz because I get these great dividends that I make millions of dollars off of, which he just bought Pool and he bought uh, Domino's Pizza and they give out, or not Domino's, yeah, Domino's, and they give out dividends too. So he loves those dividend stocks, but he still has 325 billion sitting there waiting. And again, he's not doing that because he wants to. He's doing that because he thinks the market's overvalued based on what you just showed us. Okay, so
yeah,
he's using all that knowledge, and we'll see what happens. We'll see if he's right. But he's
yeah,
not the only one. I mean, look at Nvidia stock. Stanley Druckenmiller, right?
yeah,
Druckenmiller,
yep.
okay,
Oh,
and he
yeah.
has he's the head of the Biscayne family office. He sold all of his Nvidia stock, okay, in the last uh, reports that came out that they had to give the SEC. He opened a new position in Broadcom, and holds 239,980 shares. Ray Dalio, Bridgewater, sold 27% of his Nvidia holding. This is last quarter, and now owns 4.7 million shares. So he still has it. He increased his holding in Broadcom by more than 290% and now owns 955,433 shares. So you're starting to see, look at what these guys are doing now. Druckenmiller got out of it totally, and he moved to Broadcom. And you're seeing that Ray Dalio didn't get out of it all, but he took a shaving and some profits off. He moved that over to Broadcom also. So
Yeah.
when you think about NVIDIA, and a lot of people are NVIDIA uh, as a religion, it's a great company. But as we have talked, you're starting to see the revenues, okay, even though they're good in a percentage, those percentages are coming down. And
Yeah.
not only that, they have a lot of competition coming up. Okay. So Jeff Bezos, okay, is throwing his weight behind a computing company that's coming from NVIDIA's dominance of the artificial intelligence chip market. Bezos Expeditions, that's his private investment company, was part of a uh, $693 million fund of this new company. Okay. And he was joined in this. Hold on, gosh, he was joined uh, in this funding of a company called Tenstorrent. He joined LG Electronics and Fidelity in the round led by South Korean firm Samsung Securities and AFW Partners. Okay, so Tenstorrent, okay, said it will use the money to build out open source AI software stacks, hire developers, expand its global development and design centers, and build systems and clouds for AI developers. The company has strived to provide more accessible and affordable solutions for companies looking to develop their AI capabilities, putting itself in direct competition with fellow Santa Clara, California based NVIDIA. So far, it has signed up about 150 million in contracts, they said. So the founder told Bloomberg that Tenstorrent, which is a weird name, uses
Mm-hmm.
open source and commonplace technology to provide engineering solutions that put AI in reach for more firms and skips costly and complex parts, including uh, including like high bandwidth memory (HBM) used by NVIDIA. He said you can't beat NVIDIA if you use HBM because Nvidia buys the most HBM and has a cost advantage. But they'll never be able to bring the price down the way HBM is built into their products and their sockets. So what he's saying is we're going to use an open source, okay, that more companies can use and become more affordable, and we're going to undercut Nvidia's cost, and they'll never be able to come back down on their cost to meet what we're doing because they're using this HBM. We're going to use open source. So you're starting to see, as what happens to everyone, you don't have a
Mhm.
monopoly for long, you know,
Yeah.
and other companies are going to come in. AMD, we've been hearing about AMD, and people are investing in AMD. Okay, why are they investing in AMD? Because they're a competitor to Nvidia. So again,
Yeah.
we're starting to see people change, and but a lot of people still invest in Nvidia thinking it's going to go sky high based on its past. Okay, and that's called recency bias. But look around and see what's happening in the environment. I'm no AI expert. I'm not a big AI investor, but I can see what's happening around the sphere of AI and especially Nvidia. Now you look at Nvidia all the time, Trent. So what's your thoughts?
It's weakening. I think we're seeing on a day-to-day basis lower lows and lower highs kind of behavior compared to the day before. And I look at where it's trading at today, just looking at a chart of it, and I'm like, it's really having a hard time right now getting through what I use the 15 and the 63. 63 represents basically a quarter of the year. That's the intermediate trend. It's above that, but it is below the 15-day trend, which is I consider trading. And so it's been hit against it yesterday. It's hit against it today on the 15. But the RSI is below 50, which above 50 is a go, below 50 is a no go. Negative boy or back D, and its slow stochastic has come back up out of the oversold category. So that could be a leading, but I'm just not seeing the volume, and I'm seeing more downside than upside in it at this point. I have a target of like 142 or so as of this morning, and 142 on the top end. So that's a day-to-day calculation, and 122 on the bottom side, which is basically one standard deviation off its historical line. So I look at it and I go, what's going to make Nvidia grow as a company? They've had this explosive growth for a year, 2 years. You could see that ramp up in the rate of change in their revenue from back in 2020 through 22. And then that ramp up in revenue growth was just massive. The rate of change of it peaked out was I think second or third quarter or first or second quarter in expansion and has since just declined every quarter. So the revenue is going, slowly going down. The earnings per share are following the same thing. And I'm looking at going, how many more GPU chips, how much more of an audience do they have to sell GPU chips to that have the power to use them? And I think that's the question I have is how much more expandability in this initial build out phase of data centers in semiconductor world? How much more build out is there? Is there more top end versus low end, or is there more low end versus top end? And I'm sort of on the belief that the top end is we are near the top end of the GPU spending behavior. And I think we're seeing that with AMD laying 1,000 people off. Um, and so when things get up that high for that long, I think you got to be cautionary. And,
Yeah,
that's what
I
I
can't.
see more potential downside in NVIDIA. You may have a pop between now and the end of the year, but I think over the next 6 months, there'll be a better buying opportunity.
I can't
So,
disagree. Yeah. And
yeah.
you're going to have an opportunity to maybe trade 24/7 because the Securities and Exchange Commission granted approval to 24 Exchange. That's backed by Steve Cohen's Point 72 Ventures. Following the start of second application attempt, the approval comes amid growing momentum for extended trading hours, with Charles Schwab recently announcing plans to expand 24-hour trading access to all S&P 500, NASDAQ 100 stocks by 2025. This exchange will launch in two phases, beginning with regular trading hours before expanding to overnight sessions between Sunday and Fridays. A 1 hour operational pause will occur during each trading day to accommodate routine software updates and functionality testing. So for me, it's about time. Do I want to trade 24/7? No, but we do it in cryptocurrency and it works out. Why should they do it in stocks and equities? That way, you don't have to worry about weekend risk. And if things happen, you're just going to have to be more aware, set your stops, and it gives you more time if you want to be a serious trader to get in and out and in and out, and not take any time off at all. So
Yeah,
it's
I
coming.
I can see the pluses in it, but I also see the change in dynamics. You know, from 8:30 Central to 3 o'clock Central. That's when the market's open. Closed on Saturday and Sunday and holidays. Today, now you're talking about just 24/7, and I think a lot of things can dynamically change because 85% of all trades made today are made by a computer system and algorithm. They can run 24/7, and at the processing speed these guys are running these things at, I mean, a whole lot. The market becomes more and more of a traded, computerized, high-speed traded market. And you give them the ability to trade 24/7. How much does that affect the fundamentals of a company? How much news is going to affect that daily movement? And for the long-term investor, does that put more volatility in their portfolios? Especially in an industry like the financial advisory industry, who is a buy and hold strategy, does that jeopardize that approach in any way? And if so, how?
I don't
And
think
do
so.
they are they forced to change?
I think they'll be forced to change as traders to, if you're not a big company, you don't have computers trading for you, you're going to have to be more aware. Okay. But as far as the volatility goes, you're going to have volatility anyway. Let's say under this current system, something happens over the weekend and a war breaks out. You're going to know on Monday morning, the oil prices are going to spike. Okay. So you're not going to have those big old gap ups like that. You're going to have, because it's 24/7, you're going to see it go up candle by candle, whether it's the minute chart or the 5 minute chart, you're still going to get it. You're just going to have the opportunity to react a little better and not have that weekend risk, in my opinion.
Yeah.
But you're going to have to be more aware. But that's the way it is in crypto right now.
Yeah.
I've been at rodeos before when, Israel bombed Iran or the opposite way around. You saw cryptos go down, you could get in and get out, at that point instead of waiting till Monday morning and, have it already drop before you even have an opportunity. So I see it as a positive.
One of the other things it actually does, having 24-hour trading, is no longer don't have a backup of orders coming into a Monday morning. So if you have an event happen on Saturday, a lot of these systems will go in and put orders in, and they'll all pile up into Monday morning at 8:30. The market opens up, and all of a sudden you just open the floodgates and you just massive flow, and that can rip higher or rip lower and rip your face off. Whereas this now, it's just consistently have a flow of trade. So if you know somebody bombs somebody, it's already in the system. There is no backing up into it, where that, and honestly, creates probably contains the volatility a bit more than versus the way we do it now. So I think
Yeah,
there's pros and cons. I think it's just something that everybody's going to have to adapt to.
absolutely.
um yeah, and I think the systems out there, the mutual fund managers, the long-term institutional investors, there will be an adapting, a change of how things work, but maybe it actually smooths it out a little bit.
Could be. Yeah,
Yeah,
I think it's overdue time to happen. I mean,
yeah,
we're in a digital world. Let's do it.
yeah.
My 2 cents.
Join us tomorrow for part two, where we get into Bitcoin and how it's infiltrating companies, states, nation states, and so on. Have a great one. See you tomorrow.